We're back with our 4,800th video on the Ringgit depreciating. And of course, we're going to talk about two other companies, Panasonic and Careplus. Disclaimer, we do not own Panasonic or Careplus. Unfortunately, we do own some Ringgit. And guys, as usual, not financial advice. Now guys, if you're really interested in building a 6 to 7 figure portfolio, we've got the perfect solution for you. Head over in the comment section or the description to sign up for our free masterclass where you can get all these proven steps to achieve it. Right, so going with Panasonic first, it is not doing too well. It is below the COVID lows. This is very fascinating.
Yes.
And to be fair, it didn't really drop a lot, I would say. Am I right to say that? Okay, it's actually quite a lot. Almost 40 to around slightly above 20. Okay, mistake there. Recently there was a news. Actually, it's not super recent, but we're already aware. Mark is aware that they are exiting Malaysia, right? In terms of their factory.
Yeah,
right?
Not entirely, but just maybe 2 manufacturing units in Shah Alam, which is quite major. Yeah. So this news kind of hit the headline.
Actually, this one of their manufacturing units. I think if you're on the highway, you can see it. Yeah.
Okay.
You guys will probably know what I'm talking about. You guys who drive a lot, but. Yeah, anyway.
I never pay attention to that. I never noticed also. Maybe I need to go more to Shah Alam to see. But yeah, so if you look at their list of properties, right, there's actually 2 main ones. So the first one is both also is actually in Shah Alam. The first one is more of, they call it the SA1 new administrative building. So the 2 manufacturing facility in this SA1 will be gone soon. And then there's actually another one which is SA2. That one they're still keeping it. So yeah, for now it is still kind of safe. And actually there's a few more factories that is not in the list of properties, which is located in Johor and Malacca, I believe. Yeah, so I'm not sure why they didn't include that, but if you guys know the reason why, let us know in the comments, because I didn't really study much about Panasonic. But yeah, so that's about it for the list of properties. And so context is that they are going to be doing business restructuring. The reason why they're doing restructuring is because I think it's hard for them to make more money or maybe even stay competitive in the current market. So that's why they are rationalizing their business operation. And currently, there's about 1,979 employees as of March 2022's annual report. So we still don't know how many % of these employees will be affected because that 2 manufacturing facilities is quite a major production for Panasonic. The news only say that it's going to be affected like hundreds of employees, but they didn't state a number.
Right.
So yeah, that is still unknown until Panasonic actually do disclose those numbers. And they also did mention that this is not related to any lawsuit. I mean, because I believe in 2017 or 2018, there's a lawsuit between their former directors and also a few staff. But they say that it's not to do with that. It's more of business decision. Basically, they want to restructure their operation and everything. And if you look at their, revenue and profit, right, you can see that it's not really growing. I mean, after the COVID pandemic, right, it's not really like going back up to its previous high. Yeah. So, and also I think that has to do with there's a flood incident also, which affected their manufacturing plant slightly. And then it's hard for them to bounce back up after that. They cannot really find a footfall to actually go back to its previous high. So I think that's why they are rationalizing their operations.
Yeah, I mean, like, do you trust the brand Panasonic, but you just feel like there's a lot more competition going around. Not just from traditional competitors like your LGs or whatever, but also just new brands. Anyway.
Yeah. That's actually pretty much about Panasonic. Actually, I didn't realize because I was reading the book by Neo Soon King, right? Because he did mention that this company called Matsushita or Matsu, I cannot remember, but previously that was Panasonic lah.
The name,
the name, yeah. And basically, I didn't know that Panasonic has a 250-year business plan.
Yeah.
Since the 1970s. So that's actually very impressive.
That's how the Japanese people think. They think in decades or even in this case centuries.
Yeah, and back then, right, they also before they even enter any market, right, they want to make sure that they can become the dominant, they can acquire a dominant market share in their particular industry, and they want to sell the lowest price.
Yeah.
So when they see like a particular product that's in the market, right, they will find ways to replicate whatever they make at a cheaper price.
Yeah,
and they dominate the market.
Yeah, that makes a lot of sense. In fact, that's what Japanese products are known for, right? Affordable, good quality.
Yeah, but sadly now we are seeing they are having troubles. But back in the 1970s, they are like a top dog in the industry.
Yeah.
So yeah, sadly it is now like this.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
But anyways,
okay, gloves.
Yes,
there you go.
Careplus.
Gloves.
Yeah, not many people have been talking about this because they actually announced this news like I believe 2 days ago. So if you look at their year-to-date price, is down 38.5%. So it's nothing too exciting at the moment. But before we go to the exciting part, currently they're still making losses, of course, because of gloves. Average selling price is not doing that well. But this is the exciting news. Maybe to the public, because they are going to EV with Go Auto.
Okay.
Yeah. So let's check out what is the context. So number one is that they're going to be joint venturing, not a word, but I'm just make it out, with Go Auto Group Berhad. And funny thing about this Go Auto Group, right, I cannot really find any financial data in SSM, or maybe the website didn't look for me. I'm not sure whether there's a maintenance down or whatnot, but yeah, I cannot find any data about this company. I was interested to know how much they're actually making in revenue and profits, but yeah, sadly. And basically they're trying to make and sell electric vehicles, and they're going to be a dealership for Neta EV. Now we're going to be talking about Neta EV in the next slide, but let's just go more on the details about Go Auto. So basically how they're going to joint venture is that Careplus will buy 30% of Go Auto, but they will be issuing 25 million new shares.
Right.
Yeah, so they're making new shares.
They're using Careplus shares to buy.
Yes,
right.
Exactly. So potentially there may be some dilution for existing shareholders. So you need to take note on this. Basically, yeah, just to get shares in order to import Neta brand EV to Malaysia. And also other business plan besides doing EV, they also have plans to explore energy efficiency management business and also renewable energy. Basically, I think they're trying to say that they're going to solar lah. Yeah, but we don't know whether is it going to be most likely it's going to be a EPCC for solar panel, but don't quote me on this. But yeah, I'm still not too sure yet. This is all just speculation from me. Okay, so this is about Neta EV. So if you actually dig a little bit further, it is owned by a Chinese company called Hozon Auto. And Hozon Auto actually planned to go IPO in Q4 2022. However, we still don't see the results from their IPO listing yet. They have actually been in talks about this since 2020 or 2021, if I'm not mistaken. Right. Has been quite a long time already. And they actually were valued in December 2021 about 3.5 billion USD. However, in the latest update, they did mention that they are going for IPO from 3.5 to now 1 billion. So there's actually a shrink in valuation. I'm not sure why. And another stats that you can get from this is that they are actually still in a net loss, about 410 million in 2021. So they are not really a profitable company at the moment, even though their sales production is all like going up. But yeah, bottom line is still bad.
Interesting.
Yeah. And so this is just a
So specifically, how will Careplus help Neta? Like the batteries, yeah, potentially the batteries, or maybe the distribution side. So there's no news right now?
No. So they basically just say that they did mention make and sell EV, but there's like no further context. And then another context is dealership of Neta EV. That's it. Yeah. Okay. It's still in the proposal stage lah, I believe. Okay. Yeah. So there is not much of a news to talk about this. And it's still pretty fresh out of the oven, and it's like 2 days ago. Yeah, so this is just a comments. Basically, Careplus is going from glove to now EV. They're going to another hype industry again. Not again, but this is not the first time we see these kind of companies actually going into industries that is very popular. And the next one is, I'm not sure whether this is a desperate or calculated move. So this is still a question mark from me. I'm not going to speculate anything. But the last point is Hozon Auto is currently burning a lot of money operating their business. So that is something that you need to know. And Careplus is going to be their dealership for these companies. So not sure whether this is a good thing for Careplus or bad. You guys decide and maybe even let me know in the comments down below. So yeah, any further?
No, I think always adopt an attitude of skepticism when people make such a big shift, especially when they're shifting into these sort of industries where there's no prior understanding or prior experience potentially. Now, of course, I cannot say that with 100% confidence because we still don't know. They have not announced what exactly are they going to do with electric vehicles. If they are going to manufacture, then I'll be like, okay, how are you going to do that? But then at the same time, it could be, potentially easier because they are in the manufacturing sector. But if they're doing dealership instead, well, that seems like a slightly simpler kind of business model, but also nearly completely opposite skill sets, right? For them, then it's about marketing, relationships and all that. So it's a different ballgame whichever side they go in the potential areas that they're working with. What's the name again? Netto, right?
Yes,
Neta,
exactly.
sorry.
Neta. And but first phase is definitely going to be JV with this Go Auto. Yes. I believe Go Auto is the one that is manufacturing the EV, assembling the batteries and everything. So the role for Careplus, that one is still a little bit of a question mark.
Right. And of course, I do look at Hozon Auto, right? How consistent check out people's views on their products. It's not like if you play a minor role in such a big, I think a lot of Malaysian investors especially kind of look down on Malaysian companies because they don't even manufacture the final products and all that. That's not the right way to think because there are many instances when these, they could be doing EMS stuff, who knows? EMS, but for, EVs. Let's say they are, it doesn't mean that, it's a bad company, right? We know in Malaysia that there are many EMS players that are actually very valuable. I mean, SKP Resources, I know they're struggling a little bit now, but at least when you take a 10, 15-year horizon, they've done tremendously well. Because they supplied certain components, did work for Dyson, right? Dyson's products are amazing. And so that's really one of the key areas you want to look at, right? Like, there's so many EVs out in the market today, and then there's of course the big boys like Tesla. And what is it about Hozon that's kind of unique, right? Because if Hozon cannot get, especially for their EV segment, consistent orders, reviews are bad, whatever, before you know it, this JV is completely pointless, right? Because there's no business to begin with. Of course, as well as look at some of the management track record of Hozon. That's where I would point you guys to.
Yes.
Alright guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback as long as they're constructive.
Okay, so the final one will be very, very interesting.
Of course.
Because it's about Ringgit and USD again.
Yes, so yeah.
Yeah, okay, back again, after Anwar became our Prime Minister, I believe it actually appreciated against USD at a short time or period, and then now it's back up to its high again, which is 4 ringgit and 60 cents. Yes, MJ, please tell us what's happening.
Yeah, so the big one, and sometimes people need to realize that it's not Malaysia's fault per se that the ringgit is weakening. What people need to understand is that when the global economy shows sign of weakness, virtually every currency will also decline in terms of relative to the US dollar. Why? Because US dollar, whether you like it or not, is a safe haven asset, right? So what's contributing to global economic weakness? China. So on the left chart is the PMI for China. PMI is just a forward leading indicator for the manufacturing sector in China, and you can see it's on a downward trend and it's below 50. For those of you who don't know, when the PMI is below 50, it means that things are not growing, things are contracting. And as we know, manufacturing is the largest part alongside real estate, right, in China. Services are doing a little bit better, which is probably a good sign internally for China. But as far as, just manufacturing and, global economy is really not doing well. And of course, this affects Malaysia because for 14 consecutive years, China has been our largest trading partner.
Pretty good.
So that's why.
All right. Okay, and the next one, it's got to do with politics.
So there's external and then there's internal. So there are a lot of people who think that there's no clear economic policy for Malaysia. So I think that's something that most Malaysians are familiar with, right? Or, we changed PM. Even the new government that we have now, their seat is not as secure. So can they actually do long-term planning and stuff like that? Now, of course, the Prime Minister Anwar has indicated that, foreign investors still like Malaysia because the economic policies have become clearer. And if you notice and follow politics a bit, people like what's this guy's name? Not Tengku Zafrul, our economic affairs minister. Cannot remember his name.
Oh shoot!
But you know what I'm talking about, right? I keep forgetting the guy who transformed
I know how he looks like.
Statistics. Man, how can I forget him? But anyway, you guys know who we're talking about. He's been going around, going to Bloomberg and talking abroad. We all know who we're talking about, all right? It's a guy balding a little bit. It's an 18 million net worth from PKR. So anyway, so I think there is a bit of a clarity that, the government knows that they have to bring clarity to not just Malaysians but also foreign investors, and they're trying to do that. It's quite clear, right? Now, amid all the noise, this is a often ignored area of discussion. It's probably not even a discussion point. 264, 250, about 55 billion US dollars worth of approved investments happened in 2022. No one talks about that. And what's interesting is that Q3, this is the amount assets, the net assets.
Rafizi.
Yes, Rafizi, yes. Rafizi, yes. Thanks. Yeah, how can I forget? Rafizi Ramli. Got it. Nice.
Okay.
Persistence. So on the top right, you can see this chart here called FDI and direct investment abroad. This is just basically the amount of assets that, non-Malaysians have in Malaysia versus Malaysians that have abroad. So what's interesting is that you see Singapore, the one that we always talk about a lot. Even though the increase has been just slightly higher in Q3 2023, the number of investments by Singaporeans in Malaysia is a good 50 billion higher than Malaysians having in Singapore.
Yeah, that's pretty
right.
Yeah.
Again, these are facts nobody wants to report because it doesn't get clicks. But now now you're educated. So yeah, good on you. Some breakdowns, right? Johor, Selangor, Sarawak have received the top 3 most investments, right? But I can tell you definitely the 2 states with the best ROI is going to be Selangor and Penang, right?
Yes.
I think that's maybe KL, right? 3. A lot of that coming from the PRC, China, and then the United States. Netherlands, very interesting as well. So there are a lot of stuff I didn't really add here, like what the breakdown of the sectors, but you can pretty much guess who they are, right?
Yes, that's okay.
So a lot of the improved investments, right? It just signifies that the government really wants investments and they are determined to make policies clear. Now, of course, whether or not the policies are entirely clear, depending on the sector, depending on the company that's coming in, we can't really comment on that because obviously we will not be privy to some of this information. But there's no doubt the government wants to bring FDI. There's no doubt that they're trying to make it clear to the public that, that's what they want. And to the whole world as well, not just to the Malaysian public. So anyway, my takeaway for this is that, look, number one, when the entire globe is fearing, the ringgit is going to depreciate. That's just how it is. And I believe even the Sing dollar depreciate. Of course, it depreciated less than the Malaysian ringgit. Maybe the Malaysian ringgit 3-4%, Singapore maybe 1%, 2%, something like that. And I think one thing we have to shift in terms of our mindset as Malaysians is that the depreciation of the ringgit is precisely the thing that gets us FDIs and jobs and people investing here. Yeah. Right? Because if you have a country like, let's say, Singapore that has this kind of like very stable currency, mainly because they are like semi-pegged to the US dollars and major currencies, what's going to happen is that the only kind of investments you're going to get are financial investments. So the thing that I didn't really add here was, what are some of the top segments that the FDIs are in, right? And in Malaysia's case, financial activity, so investing here and all that, is maybe second or third place, whereas Singapore is like number one, right? So yes, it's true, Singapore will also have their own FDI, but a big chunk of it will just be rich people parking their money there. Then they put it in bonds, or they will, put it in family offices. And then they generate the interest, and then it goes to them.
Yeah, what's there to develop in Singapore further?
Yeah, in that sense,
compared to Malaysia.
Correct. Yeah. So, you gotta understand that, right? Like anyway. So, we need to adjust our expectations. We cannot expect. Yes, of course, now when you go abroad, then you convert, then you're like, really sad. But always look on the bright side of things. And things are looking quite bright so far. I think it is the second highest ever FDI, just slightly under 2021. Yeah,
we have been quarters or years that FDI has been pulling out. Not really pulling out, but not really putting a lot of money into Malaysia. And right now we are seeing signs of the recovery already.
Yes.
Which is very good for Malaysia economy.
Yes. And the thing I didn't add here is that, this number here, 893 billion and then 617, there's a net figure there. And it has been growing since, I think, 2020, 2019. So that's always a good thing.
Yep. So now you know the reason why. And also, I believe it has to do something with the interest rate, right? Because US has been aggressively pumping their interest rate as compared to...
that contributes, but at least the recent ones has to do with just global weakness, right? Because it's very simple. If China is not doing well, again, that's outside of Malaysia's control. The only control we have is the exposure that we want to have to China. And are we going to say we're not going to have exposure to China? Obviously not, right? If these countries, big countries, don't do well, it doesn't matter how well planned our economy is, we are going to face pressure.
Yep.
For sure. Singapore is, again, very different because they are just a place to attract foreign capital and keep it there. That's it. So that's really how it works. That's how the world works, right? It's not as simple as 1 versus 3, 1 versus 4, now 1 versus 4.6. That's we need to level up from that kind of discussion and thinking, right? We have to be looking further into how and does any of this matter, and how do we process it as Malaysia. But of course, there's always downsides. Apple just released the VR AR headset, and it's what, 5,000-6,000.
So if you convert, it's gonna be like 12 to 14,000. 3.5 USD.
Yeah, so that's kind of
3.5K. Yeah,
that's kind of sad. But anyway, guys, thanks for staying all the way until the end. If you want to know like how you can actually take advantage of USD appreciating against the ringgit, many people's straightforward response is to just get out of the country, right? Just convert your ringgit into something else and do do business elsewhere. That for me, that's simplistic, right? My favorite way is to actually invest in companies that can benefit from export exposure, from earning in US dollars, and we have tons of that in Malaysia. And if you're a bit too lazy and you even you have the ability to, but you find that it's quite difficult to find these companies and then vet the companies, we have FIRL Pro for that, right? We produce reports a couple 2 to 3 times a month. These reports are reports on companies 10 to 15 minutes long, required for you to read, so it's really less than an hour a month for you to digest what we can share to you, so you can shortcut and speed up your research by my estimations 90%. We also provide you with a portfolio, a virtual portfolio of companies that we write reports on, and we put it together so that you can see what a model and a more professional kind of portfolio management system looks like. We also have a Telegram portfolio that we do not do reports on because these are more short-term, more catalyst, event-driven kind of companies where we cannot be writing a report that will require us maybe 1 to 2 weeks to write because the attention required is quite immediate. Now, guys, if you want to check out some sort of sample before committing any amount, do check it out in the free sample link in the description or comments. Get a taste. And if you have any further question, send us an email also found in the description and comments. So just the description, sorry. Or of course, just DM us on Instagram, on Facebook, or even maybe leave a comment in the comment section. Now, guys, thank you so much for staying all the way until the end. As usual, thanks for the support, and I'm really looking forward to seeing you in the next video.